Those markets, just a few minutes before we open, 3 minutes to go, down about 180 for the Dow. Keith Fitz with us this morning. Keith, why are you watching Apple so specially today?
That's an interesting question. Apple is among the single most widely owned, most liquid stocks on the planet. As Apple goes, so goes the market, because every major institution, retail investor, or fund must own that company if they want a piece of the action.
So what do you think they're going to do? Are they going up or sideways or what?
Well, I tell you what, I'd like to see it take out 180 this week. If it does, that clears the decks at $200 a share. Apple's clearly got the moxie to do it, and I think we just need a little positive energy, and it's going to get there.
What about this the stock buyback tax? I think it's 1% on the big corporations buying back their own stock. I believe Apple.
Can I speak bluntly, Stuart? I got to tell you, that is one of the dumbest things I have ever seen implemented, because stock buybacks are actually a perfectly viable financial decision when a chief financial officer has got to maximize shareholder value. That's what they do. So if they can't find a suitable investment, they buy back their own stock. That's good for investors. If they're going to tax it, that is going to impact tech companies, medical companies in particular, that have got that kind of assessment risk, that excise risk for lack of a better term.
It is going to affect Apple because Apple has reinvested or bought back hundreds of billions of dollars worth of its own stock. I think it's almost $500 billion bought back over the years. It's going to suffer if they've got a tax in that lot.
Well, I think you're right. I mean, and again, it will suffer short term, but longer term, CFOs are a lot smarter than government officials. And so if I'm looking at this, I'm going to go with Apple every time, because they're going to find a way around it. They're going to figure out how to use that capital. Government, they're just going to figure out how to spend yours.
This week, Target and Walmart report. Are they going to tell us that a recession is on the way?
I think we're already there. I think that what we're going to hear from them is going to be critical. Did they or did they not have the right inventory on hand? Walmart has already warned preemptively, saying that it bought too much of the discretionary items. People went for the necessities. So I'm going to be watching, have they fixed supply chain issues? Do they have the right issue? How much discounting is going to really hit the board? I think people are going to be shocked at how bad these numbers are potentially.
But you're not expecting a big sell-off in the overall market this week, are you?
Well, the China stuff threw a monkey wrench in it, admittedly. That threw a spanner in it. Everybody knew that those numbers were going to be bad, but, the computers reacted to them this morning. So a little bit of an unanticipated hit, but I think, again, the numbers are stronger underneath all of this than they have been since June than a lot of people want to recognize. So assuming that stays true, I think we could have a pretty good week, actually.
Okay, we look forward to that. Good stuff. Hey, Keith, thanks very much indeed, sir. We'll be watching Apple. I'd love to see it get back above 180. Good stuff indeed. All right, the market.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.